This is Create the Next from ProCFO Partners, where every week we explore strategies and ideas for financial management and growth to help today's businesses put their financial picture in context.
Welcome back to Create the Next. I'm Chris Bentliff, and today I have Randy Talcott joining me. And Randy, it's so nice to have you joining us today. And we're having a conversation that I think is interesting, especially in kind of the business climate or the economic climate that we're in, which is we're talking about raising capital, and there's a lot of reasons to do it. And I wonder if there's new reasons or a new pressure, maybe not new reasons, but I wonder if people are feeling differently focused on it in these moments or in these days. But I don't want to jump the gun. I want to get your take on things. So welcome to the show, and let's talk about raising capital. Why would I want to raise capital to start with?
Well, thanks, Chris. And there are lots of reasons that people raise capital. And, one of the reasons I wanted to talk about this is that many entrepreneurs who are very good at the substance of their business have no idea what it means to raise capital or why they should or how much to raise and so forth. So it becomes really important for many businesses because they may be raising capital to start up their business. They may be raising capital to fund losses. A lot of companies have a plan that says, well, I'm going to become profitable in 12 months or 24 months. Well, what do you do in the interim for cash? Other companies, on the other hand, are well established, and they're looking for capital to finance a particular project. Or they may need working capital. Perhaps their business is cyclical or seasonal, and they need to get through those periods where capital is really tight.
Do you have a formula for how I know when it's time? Because I've seen organizations, I've been in an organization before where our prospects are looking good, or whatever, and so capital gets raised, but then things change, and I wonder if folks jumped the gun, or it was too late, and by the time some of that capital was finally, released, you were playing catch up. So, is there a sensibility about this is the time when you should really be thinking about this?
Sure, that's a really great question because many people don't think about it, and they are put into a position where they're raising capital when they don't have it and when they're desperate for capital, and that's really the worst time to do it. So what I like to do when I go into a business for the first time is do some financial projections. Now, part of that is making sure that we have a good accounting foundation in the first place so that we know what our ongoing revenues and expenses really are. But then we try to look into the future, and we try to do this looking at each month for at least the next couple of years, ideally 3 to 5 years, but we often just start with one to get our projections right. And we do not only income statement projections, but balance sheet projections and sometimes cash flow statement projections, because those will show us where we're likely to see stresses in our capital structure or in our cash flows. We also like to stress test those a little bit. So, okay, we've got what our best idea is right now, but what if there's an economic downturn? What if there is a bump in the industry? What if something else happens? So we like to maybe discount the revenues by 10 or 15 or 20% just to see what the impact on cash is. And by doing that, we can kind of tell exactly, where the problems are in which periods or at which times of our development we might be having issues.
When we think about raising capital, I think some folks think about it as like capital expense. They think about new property or new rent or whatever. Some folks think about acquisition. Some folks, as you pointed out, think about just operating costs, startup funds, that sort of thing. And I feel like for the small business or the entrepreneur, 30 grand, 50 grand can be like, oh, that's all I need. But then we're getting into 2, 3, 7, 10 million. How do I go find the financing that I need? Because those are, extremely different. That's a wide spectrum. How should I be thinking about or going about? Should I just be looking online for some great fintech sort of organization? Should I be talking to my local bank? Should I be hitting up my aunt and uncle? What's some advice on where I should be finding my capital?
Sure. Sure. Another very good question, and this is the part of sort of finance and capital raising that is really mysterious to many people. But once you understand how the providers of capital uh, look at investing money, it helps you understand, where to look. So typically for really small companies that are trying to raise capital to start their business, 30,000 or 50,000 or even 100,000, oftentimes, one of the best places to look is at what I call friends and family capital. Who do you know who might be interested in investing in your business? And that's probably one of the biggest sources of capital for really small firms. Another place that people go is the Small Business Administration. The SBA has their mission is to provide financing for small businesses. Now there are bells and whistles that come along with that. The interest rates on small business loans are typically fairly low, but owners have to provide usually a personal guarantee on any funds that they borrow. Another place to look if you're a little larger may be the equity capital markets. So many of the private equity firms out there they're not really interested in investing $50,000 or $100,000 in capital, and that's because they're trying to manage a lot of different investments, and the smaller the investment is, and the more of them there are, that just increases the amount of work that the private equity firms have to do. So they're typically looking at writing larger checks for a little bit larger businesses, ranging from anywhere from say 2 million on up. I mean, some of the private equity firms are so big they're writing $100 million checks. So and then finally, banks can be a good place to look. Now, it's a little harder if you simply walk into the branch of the local huge national bank and say, I want to set up an account. So I always recommend to small business owners that early on in your small business career, it's a really good idea to start establishing a relationship or two with smaller local banks, because those banks are really interested. They're invested in the community and they're interested in seeing you grow, and they're more likely to take a close look at your business plan and talk about when the time might be right to provide some bank capital.
I think that's a really great advice. And you mentioned something right there at the end that has been percolating for me as we've been talking about your business plan. You mentioned earlier, you got to make sure you've got your financial statements and your ducks in a row and your reporting and all that kind of stuff. Talk to me a little bit about that. I'll be a small business guy and maybe I've got a P&L easily at hand. Is that all I need? Maybe I've got, some projections right at hand. Or maybe I'm in a larger organization and my CFO has a spreadsheet that'll take me from here to 2040, but it's really granular. What do I need really? Like, what's the essentials that I should really have at the ready so that I can start to explore this and not be told, well, you're not ready?
Sure. So one of the things that is really helpful early on is to create what we call a flip book or a deck it's really a PowerPoint presentation, which will, in a nutshell, describe your business. So I always say that you need to be able to get somebody comfortable that they understand what you do in your business in about 10 minutes, because that's really the maximum attention span that you're going to get from somebody when you're talking about just how your business works. And if you can get them interested in that 10 minutes, they're going to be willing to listen further. In terms of financial information, a couple of the biggest things that investors are looking for is, number one, how much capital do you need? And number two, when do I get paid back? And how do I get paid back? And in order to explain that to somebody, you're going to need those financial projections that we talked about earlier. And that's why I think it's really important. If you're thinking about a 3-year loan or a 5-year loan or even an equity investment, For lenders, it's very important that they see financial projections for the entire period of the loan. So if it's a 3-year loan, be prepared to provide them with a set of 3-year projections by month, and they really do need to have, at a minimum, income statements and balance sheets. So that is the real, those two things: a description of your business, and of course what you're going to be using the proceeds for, along with the financial projections, are critical. They're absolutely critical to getting new capital.
And frankly, we talk about this all the time with ProCFO Partners, is that one thing is in relationship with the other, and with the other, your marketing, your sales, everything needs you to be able to succinctly and efficiently describe what it is that you do and why it matters, and how you make money. And I think that's sometimes overlooked in a really basic way. We can get sort of myopic about the things that we're focusing on and forget that needs to be simply described. I'm wondering about venture capital, which that's a little bit separate from the conversation today. But how important is it? Because venture capitalists will often be looking for, so what's your path to profitability? Is it the same when I'm kind of looking for private equity? Is it the same when I'm talking to my bank? Is that important to them?
I think it is. Obviously, nobody wants to write endless checks into a business for years and years without seeing any kind of a return. So you hear about the A round and the B round and the C round. Those are successive capital raises that people use, and many venture capital is an entirely different world than the private equity world or the banking world. Venture capitalists are willing to take on some of those additional risks that the regular private equity firms and banks and some other sources of capital are not. So when you're talking to venture capitalists, they're more willing to believe in your business and to believe in profitability, but they've got to. That's where the story becomes at least as critical, maybe even more so than the financial projections themselves. So people have to understand what is your product or your service, and why is it going to be so successful? And they need to be convinced of that before they're going to provide you with capital.
I love this idea of having your story and being ready and able to tell your story, and even positioning it like that. How important, I'm thinking about, as we talked about, kind of your regional bank or your local bank, but I think it would really benefit me to have a wide network of folks who could make introductions to me, who could give me advice, who could steer me in the right way, away from the wrong way. Do you agree? And should I look to my executive advisors, to my peer groups, to my CFO to help establish some of those? Or how do I kind of, I don't know, how do I start to make the right handshakes in that conversation with folks that are kind of already vetted by people that I trust?
Yes, and all of the above. So I think network. I think you cannot underestimate the power and the usefulness of networking. And networking doesn't necessarily mean asking for people for things. It means letting people know what you do and where your business is and what your business needs right now. So yes, I think networking is really particularly important in financing, because you look at LinkedIn and you do web searches and you see all kinds of financing opportunities. People want to provide you with capital. Well, sometimes that capital can be extraordinarily expensive, and you can get it a lot cheaper. So it's really important to network with those people who you know and trust, who can introduce you to reputable capital sources who might be able to point you in the right direction, or even possibly provide capital for your business.
Randy Talcott from ProCFO Partners with excellent advice and insight today. Randy, I really appreciate how your expertise and experience and insights have really, I think, painted a clear picture and an easy to understand picture about some things that can be complicated and complex and frankly intimidating to a lot of folks, especially in those in the small business world. Thanks for your generosity with that today. Can't wait to have you back for another episode soon.
Thanks for watching, and a special thanks to our subscribers. Consider becoming one today. Visit ProCFOPartners.com for more strategies and ideas for financial management and growth to help you put your business's financial picture in context.